Hello and welcome. You're watching News 9 Live. We here at News 9 Live have kicked off our pre-budget programming in this special series that we're calling Budget 2024 Blueprint for the Big Leap. It's the first full budget of the new Modi government and the expectations are riding high. The Indian stock markets are already at record high on the back of solid economic growth, easing inflation and expectation of a well-balanced union budget. The expectation is that the budget will aim at fiscal consolidation while boosting manufacturing, infrastructure growth and will also focus on rural sectors. The markets will look for measures to boost consumption, support savings for middle class and provide some relief by the way of personal income tax or personal taxation. What factors could move the markets and what will the investors be eyeing? We're going to discuss all of that on the show. Joining us is Gaurang Shah. He's the Senior VP Geojit Financials. Also with us is Sudip Bandyopadhyay, who's the Group Chairman of Inditrade Capital. Gentlemen, it's been very long since I last spoke to you. Thank you very much for joining us. With me in the studio is Suyash Maheshwari. I'll first come to Suyash here since he's right here with me. Suyash, the markets have moved like a pendulum from the day of the counting up until now and they are at a record high. What are you making of the market movement in the past 2 months?
Certainly, Shweta. I mean, the market movement has been rather strong ever since the counting day. Remember, it was a big binary event for the markets because, of course, it kept the investors on the sideline. What's going to happen? What the final tally for the, the Modi 3.0 government now that we know of it, would look like. And the market was waiting on the sidelines. But as you mentioned, the movement, the up move has been rather strong. Sensex in, just a matter of month has rallied from about 70,200 levels, which was, by the way, the low it hit on counting day to about 80,000 levels. Now, that's the fastest 10,000 move, we have seen for the 30 share index. And the ride up has also been rather smooth. We have not seen any major movement on either side. And as I mentioned, the election was the big binary event for the market participants, especially for your foreign institutional investors. Look at how, they are back and they are back in a big way for that matter. In July alone, I mean, in the first 6 or 7 sessions alone, they have bought more stocks, more Indian stocks than they bought in June and March combined. The only 2 months they were net positive on Indian markets. They have bought equities worth over 7,000 crore in July alone. Look at how the domestic institutional participants have been building onto their positions. The last time that they were net sellers was back in July 2023. So they have been buying consistently in Indian markets since the last 1 year. And even the retail buzz, I mean, it's so strong. The recent AMFI data, Shweta, it suggests that the SIP flows are at record high. Their AUM, asset under management of mutual fund houses, that is at record high. Equity inflows is at record high. So clearly there is a lot of excitement and exuberance in the market currently, but there are just about 7 sessions left in the run up to the elections, and we are seeing some semblance of profit booking taking place right now. The markets could be perhaps choppy in the next 7 sessions because, see, again, the up move has been rather strong. So most of the upside that you just laid out for us in that intro, I think that has already been priced in. Okay. The participants will, of course, wait what happens when July 23rd comes.
All right, let's quickly get in Gaurang into this conversation. Gaurang, hi, good evening. Do you think market has already factored in everything that Suyash just talked about? We are just a couple of days before that full budget of the Modi government. What are your big expectations as far as markets is concerned?
Well, good evening, Shweta, to you and to Suyash and my good friend Sudip Bandyopadhyay. Elections will come and go every 5 years, provided we have a vote of trust and the government falls down. Then you might have an intermediate election. Budgets will come and go every year. This year we have seen 2 of them. One was on account, and the next one is post-election and the government being in place at the center. And I guess every year, a lot of expectations get built up, Shweta. With respect to individual tax, with respect to tax related to the security market, equity market, with respect to, a populist budget. And this time around, that voice is a little bit louder on the street because of the numbers that the BJP-led NDA got, what they were speaking about and with what they actually got, etc., etc. But I think over the last 10 years, what we have seen, Shweta, is that this government has walked the talk. They have used their wisdom when it comes to delivering a budget or any reform policy is concerned. And I think this time around also, what they will possibly be doing is looking at growth, how to take India's growth to the next level, how to push manufacturing and services industry, how to create more employment so that unemployment numbers come down to a very reasonable level, and how to attract FDI flows. Defense, power, infrastructure, agri-related, and possibly something related with the Indian Railways. I think overall that's going to be the broad theme. If the Honorable Finance Minister on 23rd of July does give us a pleasant surprise in form of an individual tax cut, then I think that's going to be a cherry on an ice cake.
All right, cherry on a nice cake, something that everybody would be looking out for. Sudip, what in your assessment are going to be the factors that will move the market post the big budget? We saw a intraday movement like never before during the counting day, something that many market participants hadn't really thought of. Since that day, markets have recuperated and recuperated very well, for that matter. What, according to you, during the budget day and months after that, are going to be key events to watch out for?
Good afternoon to all of you. And as Gaurang ji mentioned, I think budgets come and go, but the government's consistency in policy making becomes very, very important. But the way I look at it, the market and the global investors, including domestic investors, look at least amount of tinkering. And this government, particularly, I must say that they have resorted to least amount of tinkering, which is unnecessary normally. A lot of tinkering used to happen with tax every year, and that has stopped. And I think that's a very, very good trend. Now, coming back to specifics, I think the market will cheer if there is some fiscal stimulus by way of some relief in personal tax. We all know that I think there is a big, big demand for giving a boost to consumption. That can happen if there is some relief given in personal income tax. I know we all will be happy, but I think that is what is required. And the government now has that fiscal leeway with a massive dividend which they have got from RBI. I think there is a bit of a flexibility which the finance minister has this time. Second thing I would say is that as far as capital gains tax is concerned, we definitely don't want too much of tinkering, but simplification of capital gains tax in a meaningful manner is definitely warranted. There are too many clauses, there are too many nuances and too many variations in the overall capital gains tax treatment. Now we can simplify it by dividing the entire thing into either it's a risk asset or a non-risk asset. Basically, equity and equity-related asset and non-equity related asset. As far as equity-related asset, there can be one type of treatment, one type of holding period. Non-equity, other assets can be a different holding period and different treatment. But simplification definitely is required. There are too many complications now. The third thing I would say is that there is a clamor, there is a lot of statements coming out from multiple authorities, including Finance Minister, SEBI, that something needs to be done about F&O. Retail investors needs to be protected. There is an euphoria. Probably there is excess speculation happening, and it may be a recipe for a disaster at some stage. Yes, the concern is well understood, but increasing STT or doing some kind of taxation and kind of trying to curb the market probably is an unfortunate step. What needs to be done, and that's one of the suggestions by the SEBI panel, is that increase the threshold. Instead of 5 lakh, make it 10 lakh, 15 lakh, 25 lakh, whatever it is. I think that can be a much, much better way. Whether that gets addressed in the budget or separately by SEBI needs to be seen. But I think as far as a capital market participant, capital market commentator, I would say these are the most important things. Rest of the stuff, I think it will be by and large continuation.
All right, and Gaurang, I'll come to you. Hi, Suyasha. And, Mr. Bandyopadhyay was talking about all this, SEBI and perhaps Finance Ministry taking measures to curb this unabated rise in F&O. There are also talks of, perhaps putting it in that speculative bracket where it could, F&O trades could attract about 30% tax, similar to cryptocurrency. I mean, that could be a major market mover, right? Because apart from speculation, F&O is also used for hedging. If you take that ability out, the markets will become super volatile.
Suresh, my good friend, good evening to you also. How many people who operate in the F&O segment actually hedge their position? You and me know the fact and the numbers. So let's face it. I mean, it's Alice in Wonderland if we believe that that's really happening. Okay. So, and crypto, let's leave that universe aside because that's something that I don't want to go even near about. But let me say this, the unsolicited unrecognized university of WhatsApp and the YouTubes and the social media who are responsible for this glut or rushing into the F&O puts and the calls of the world has actually created this kind of a situation. And I think it is very prudent because here we are talking about increasing the base of retail participation in Indian equity market, either via mutual fund or directly into equity markets. We don't want traders, and let's face it, I mean, numbers are in front of us. Out of 10, we know how many traders make profit and how many make loss. Okay. So, I mean, it needs to be understood very clearly. People who don't know the meaning of futures and options are going into futures and options. I mean, that's the dire situation over there, and this needs to be addressed. How it is going to be addressed, I think I'll leave it to the wisdom of the authorities, SEBI and the Ministry of Finance and other regulators. But if you don't want a lot of people to have an unpleasant experience, then I think this needs to be curbed to a certain extent.
Mr. Bandyopadhyay, what are your thoughts on this? I mean, 30% tax potentially on F&O, is that something that the market will be okay with? If not, how will it react? Will we see a major drawdown in the months to come, the weeks to come?
No, so this is exactly what I was mentioning in my opening remarks, that will be a disaster. I don't think that needs to be done because, the way I look at it, that it is a hedging tool as well. And we need to encourage market to develop in an orderly manner. What we want is we want to restrict the retail small investors. For that, the threshold limit needs to be raised. Instead of today the lot size, whatever the lot size is, now the threshold is 5. That 5 can be made 25, 30, whatever, 20, whatever they want. And with that measure, bring down the small investors' participation. I think that will be the effective way of handling it rather than, making the tax, taking the tax to an absurd level and discouraging this entire F&O segment. F&O is a very important component of the market. What we want is not the retail to come and unnecessarily burn their finger. So we should address it that, not kill the F&O.
Okay. Mr. Bandyopadhyay, you packed a lot in your first answer to what your expectations are of the budget. One of the things that you mentioned was whether a government should be spending more, giving more to the people by the way of, extra discretionary income, because we need, let's face it, we need more spending from people. We need to ensure that people have more money, this year onward, given that financializations of savings are at an all-time low. Household incomes have also been thinning out. Now, government has a huge bandwidth by the way of financial runway that's come in form of that RBI bonanza of 2 lakh crore rupees. Where do you think the government is likely to spend it? Will it be towards, perhaps fiscal consolidation, or should the government be actually ensuring that it ups the spending?
In my mind, the government should up the spending. There is a need for ensuring that the consumption gets a boost. We know the FMCG and the entire rural semi-urban economy was, having a challenge as far as consumption demand is concerned. So I think that consumption demand definitely needs a boost. Now, unless the consumption demand gets a boost, private capex also will not start coming in a big way. So I think it's a cycle. We need to kickstart the cycle, and that can be started only when consumption gets a boost. Budget is a fantastic way of giving consumption a boost. And this year we are fortunate, as you rightly mentioned, that RBI bonanza, RBI dividend, that has strengthened government's hand, and government can very easily go for some kind of fiscal stimulus by way of giving some, either a tax relief or some other such scheme which can ensure the consumption goes up. Of course, a part of the money will definitely go to dedicated schemes for rural India to give boost to rural expense and rural income. But a part can definitely come to everybody by way of personal tax relief.
All right, and if that money, Gaurang, is actually given, let's say it's dedicatedly partly to the to government spending on schemes, what are the sectors that one should be eyeing? What are the sectors that retail investors should be eyeing going forward? Apart from FMCG, what are sectors that you think government would be focusing on in the upcoming budget?
Well, Shweta, I think first of all, the budget should not always be of large cities, tier 1, tier 2. Budget should also take into consideration the semi-urban and rural India. And rural India more so an agri activity more so because large part of our population depends on it. And if you actually go and give that extra bit of income in the hands of those people, then the push that will come from semi-urban and rural as far as the consumption theme is concerned will get twice the momentum to get rolled on further and further, along with, of course, your larger cities, tier 1, tier 2, tier 3 cities, etc., etc. So FMCG is one part. Infrastructure creation is going to be a big theme, which is already been taken off for the last 5 to 10 years, and I think it has got furthermore legroom. So you will have infrastructure spending that will again push the consumption of cement and metals to a next level. Discretionary spend will definitely have its impact on consumer goods, discretionary luxury goods, autos, jewelry, etc., etc. And my sense is that defense is also going to be a big thing along with power generation. So these are going to be the broad, sectorial picks that I would possibly look forward to. But yes, budget should have an inclusive kind of a push as far as consumption is concerned.
All right, and since we are discussing how it's very necessary to perhaps increase the disposable income of the middle class, and that could come by the way of this 2 lakh crore bonanza that the RBI gave, not to mention another 2 lakh crore which is also expected to come in through the bond inclusion in JP Morgan and Bloomberg indices. And Mr. Bandyopadhyay, I'll come to you on this one because you mentioned that there could be some tinkering as far as tax is concerned. What do you think is more likely? Are there adjustments made to the income tax slab rates? Perhaps they increase that 7 lakh threshold, or maybe they make some adjustments to perhaps your capital gain tax, uniformity in tax. I think you spoke about it in your opening remarks, sir.
Suvash, I think these are two different things. One is the way I look at it, personal tax tinkering or personal tax changes should be for giving relief during the current budget, because that is what is required, because that will give consumption boost. And what mechanism the finance ministry will choose, I think, is up to them. Whether they tinker with the slabs and reduce the rate, or they take up the exemption limit to, let's say, 10-12 lakhs is again an option. So that straight away gives a lot of relief, or increased standard deduction. I think these are mechanics what they want to choose. But end of the day, I think what is required is giving some relief to give boost to consumption. As far as capital gains tax is concerned, I think the need of the hour is streamlining, not tinkering, not increasing, not changing the tenure or the holding period. What is required is just streamline. There are too many clauses and sub-clauses and variations in multiple asset classes, multiple holding period. Just classify the entire capital gains or assets into broad categories, risk assets and non-risk asset. And for risk asset, have one rate. Non-risk assets like jewelry, real estate, have one rate and one holding period. See, real estate and everything else can have a holding period. Shares and securities can have a holding period. And that's it. That's how it should be done. That's what I believe.
Okay, that's how it should be done. Will it be done or not? We don't know. And before I close this show, I want to have closing remarks from the two of you, Gaurang. I'll come to you first. we know what's working for the government. We know that, macros are looking great. We know that the 7% growth rate is something that we did not expect about a couple of quarters ago. And so that's working well for the government. What's not working well for the government is inflation, especially on the vegetable side. And then there is the big conversation around not enough discretionary spending and absence of jobs. In your assessment, what is your expectation and what do you want out of the budget?
Well, one more thing I would want clarification is on the divestment process also, Shweta, because we've heard a lot about it, but the government has not really walked the talk. So let's hope this time around there's a lot of clarity and actually, and I've always said this, Shweta, that government's business is to run the country, not to run companies. So let's hope there is something over there. In terms of inflation, yes, I mean, it was a very sticky issue. Last year we had deficit rainfall. This year the start off is a little bit scanty, but the catch up is happening. So let's hope that the food inflation doesn't disturb us too much. And with respect to crude oil prices, I think the dependency on Russia and Iran in terms of domestic currency imports that we're having is a good sign, but we need to be careful about that. And I only hope that they don't do something extraordinary. Just keep it very simple and push the growth and create employment opportunities. I think that will possibly bring us to a lot of stability.
All right. Sudip, your wish list for the budget.
Well, I agree with Gaurang Ji. I think, there's a 9-month exercise, 8-9-month exercise. So there is no need to do anything major. What is the need of the hour is giving consumption a boost. Just do that. Focus on that, give consumption a boost. They have already announced a massive infrastructure package in the interim budget. Continue with that or, increase it slightly here and there. But by and large, maintain what you are doing, except consumption boost is critical. One other sector I'd like to mention, that is fertilizer. This is one sector where there is a lot of reform measures which are required. The government, we understand, has been engaged in consultation with the industry for some time. Niti Aayog has been engaged. And this is one space where a lot of streamlining is still to be done. I hope at some stage, I'm not sure whether it will happen in this budget or the next one, but I hope at some stage that industry, that streamlining gets taken care of, because there is a significant amount of government subsidy burden is still in the fertilizer space, and that needs to be streamlined fully.
And Gaurang, I just have one question for you. You spoke about, government on divestment, perhaps what could be announced as far as divestment is concerned in the budget. Do you think that government will perhaps expedite the entire divestment drive, considering the stocks of, PSUs have run up so sharply over the last 12-15 months? And what happens to the holders of such stocks? Because I think it's the way they calculate the price at which the government will offload their stake is on the basis of 6 months of the past price. I mean, that means they will be selling these stocks at a discount. So that is a major cut for investors, isn't it?
Yes, Suresh, and I hope and I pray to Lord Almighty that these up levels or higher levels or valuation that we are looking at some of the PSU companies would be an incentive for the government. And whenever divestment is spoken about, Suresh, I remember our very good old company, BPCL. I mean, it was almost, you had the muzzle to your mouth, but you could not put it into your mouth. And I hope that, and don't give large divestment targets. Start with something small and get it rolled at the ground level. Because that is what, it's all about. And wealth will be created, either you are a small investor or a large investor in PSU companies. I think these companies have started to do extremely well over the last 10 years since this government came into existence. And I think they'll continue to deliver in case if that interference is not there. But divestment, like I said, I think let the people of India enjoy the fruits of the government companies. And then by divestment, you can pass on that right to the investors. And I hope there is not big number, but a decent number and gets implemented at ground level as far as divestment is concerned.
All right, and with that, I've completely run out of time on this show. Sudip, Gaurang, Suyash, thank you very much, gentlemen, for taking time out for joining us on this show. We are, of course, talking about Budget 2024, the first full budget of the Modi government 3.0. What will it entail? Whether there are going to be big surprises, and what are the key expectations as far as markets is concerned? But markets, at the end of the day, expecting stability and not a major change. I think that would be the takeaway. Thank you very much for watching.